Thank you all for tuning in to WJC 98.3 FM, your voice of music, your station. My name is Jeff Badu, and I'm a serial entrepreneur as well as a wealth multiplier. I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. We provide a suite of financial services, including tax preparation, financial consulting, credit repair, life insurance consulting, and things of that nature. Today we'll be going over a segment on the 6 reasons why you should own real estate. I think real estate is one of the most powerful assets on the planet, and I do believe that everybody should own it. And I'll be providing you 6 reasons why you should own real estate. Now, before we do that, let's get into the market report. This report is as of November 8, 2019, so as of last Friday. The Dow hit a new record high last week, and each of the benchmark indexes essentially posted solid gains as investors receive encouraging news on the trade front. Both the United States and China sent signals out that an initial trade agreement would be signed in the near future, marking the first phase of the trade deal between the economic giants. As money flowed into stocks, long-term bond prices fell, pushing yields higher. For the week, the S&P 500 posted its 5th straight week of gains, while the NASDAQ advanced for the 6th consecutive week. The largest gainer last week was the global Dow, which climbed over 1.5%. Price of crude oil went up 56.14 per barrel to 57.39. Price of COMEX gold went down from 15.70 to 14.5920. So far this year, the Dow Jones is up 18.66%. NASDAQ is up 27.73%. S&P 500 is up 23.39%. Russell 2000 is up 18.56%. Global Dow is up 15.39%. Federal funds rate is currently at 1.5 to 1.75%. And 10-year Treasury is at 1.93%. So overall, the markets are doing great. We're doing fabulous. It's a great time to be an investor now, especially somebody who bought at the beginning of the year and it's holding or has bought over time. It's a great time to be in the stock market. It's up tremendously. This will be the best year that we have in the stock market over the past over 10 years ago. So this is definitely a great time to be an investor. And for those who are not investors, I highly encourage you to at least consider becoming an investor. So let's go through the 6 reasons why you should become a real estate investor or should own real estate. 9 out of 10 millionaires got there through real estate. So in order for the 9 out of 10 millionaires that are out there, for them to cross the millionaire mark, they got there through real estate by acquiring a building, owning a building, flipping a building, whatever it is. They did it through some form of real estate. Real estate provides some major benefit that no other asset class can offer. Truly, there are a lot of different benefits and things of that nature when it comes to real estate. Although it can have its ups and downs, everyone needs to have real estate in their portfolio in some way, shape, or form. I'll tell you the top folks as far as net worth in the world: Bill Gates, Warren Buffett, Jeff Bezos. All of these guys own some type of real estate. It may not be the main source of their, the main component of their net worth, but it is a big part of it. So real estate to me is an asset that everybody should own and everybody has the opportunity to own. The first benefit of real estate is providing cash flow. Essentially, it's an opportunity to build long-term wealth and increase your cash flow. So let's say, for example, you buy a building and you're making positive, you're making income of $1,500 a month, and your expenses are our expenses are at $1,000 a month. That's $500 extra cash in your pocket every single month. Essentially, it's $500 extra that you wouldn't have had if otherwise. Best of all, it's money you don't even have to work for. It's passive income. Sometimes you might have to put in sweat equity and all that stuff, but ultimately, this allows you the opportunity to build massive passive income. So that's one of the keys of real estate. The main reason why I buy real estate is because of cash flow. It's to earn money over time without necessarily having to sweat or work for it. It's not like a W-2 job. It's not like something you actually have to go out and work for it. It's an asset that you acquire, and then it's basically making you money over time, whether you work or not. So that's what we call passive income. The second benefit of real estate is that your tenants are the ones that are paying down your mortgage for you. So as the tenants pay you rent, part of that money is going towards your mortgage, which ultimately means that the tenant is paying down the mortgage for you, and this allows you to build equity over time. So the tenant is helping you build equity in the property, which helps you build wealth. As you build equity, or as the tenant is paying down the mortgage, it increases your equity, which allows you to refinance the property, take a home equity line of credit. You can sell it and make a profit, and it could be potentially tax-free. So the tenant is the one that's helping you build this equity. So in reality, even though you might be, let's say you buy a house and you're making the $1,500 a month in income, $1,000 a month in expenses, and $500 of that $1,000 is the mortgage. Basically, your true cash flow is $1,000 net profit because the tenant is helping pay down your mortgage for you. Less the interest cost. So the principal, some of the money is going towards principal. Once you build a fairly substantial amount, you can get things like home equity line of credit, things of that nature, cash out refinance, which are all tax-free vehicles. So just a few things. And then next is you have the tax benefits. For me, this was another big one. This is where I help clients the most. It's my personal favorite, although cash flow is what I strive for the most. But my personal favorite is the tax benefits. First thing is you get to deduct all expenses associated with the property, including repairs, maintenance, insurance, utilities, property taxes, mortgage interest, that your tenant is basically paying for. So your tenant is the one paying you rent or paying for these expenses, and you actually get to deduct it. It's crazy. You're taking the tenant's money, using it to pay these expenses, and you're getting to deduct these expenses on your tax return, because we use a net profit when we look at the taxes. And now we have depreciation. Depreciation is another form of a tax deduction that helps reduce your taxable income down to 0 or even put you in a negative. I essentially call this magic. It's the magical deduction. It's a deduction you don't actually see in reality. But basically, you can depreciate your property while your property in reality is appreciating. There's an IRS rule that allows you to depreciate the property. It sounds strange, but you can depreciate residential real estate, so properties that people live in, over a 27 and a half year useful life. And then it's 39 years for commercial properties. This allows many people to declare a loss on a tax return, when in reality they're making a profit. So basically, depreciation helps you reduce your taxable income, but in reality you're truly making a profit from a cash flow perspective, or cash on cash perspective. And then also, what some banks that I know, some banks will actually add it back. They'll add depreciation back to your net income or your net profit in order for you to increase your debt or reduce your debt to income ratio. So even though you're taking a deduction and you're not paying any taxes on the income, the bank will allow you to reclaim that income basically, and back out or take out the depreciation and add it back to your income. I think this is very powerful. It's great for people who are looking to reduce their tax liability, but also get qualified for a mortgage. So it does not really impact your debt to income ratio when you're depreciating the bare bones of these properties. So yeah, depreciation can help you reduce your taxable income. You can use more advanced depreciation techniques such as cost segregation, which essentially allows you to accelerate the depreciation on the property by stripping out or ripping out certain components of the property, such as the appliances, fixtures. And with the new tax law or with the new tax reform, depreciation got even sweeter, because now you can depreciate these things over 1 year, or you can write it off up front. So if you bought appliances, fixtures, tiles, floors, whatever it is, some of these things, or actually even most of it nowadays, you can actually depreciate it, write it all off in full. And even if you do that, the bank will add it back to your income. So you're basically, you're getting the best of both worlds. You're reducing your tax liability, and you're still being qualified for a mortgage. It's a beautiful strategy. This is something you definitely would need an expert. Highly recommend you look into a cost segregation study, which is where an engineer comes out to the property and actually inspects every single component in order to accelerate your tax deduction. And then also 1031 exchange is there are techniques in order to sell the real estate tax-free, including the 1031 exchange. Basically, you're trading one property for another. Won't get into the details of that. Just a little too complicated for this segment. And we also went over it last week as far as different ways to sell real estate tax-free, so I won't get too deep. You can utilize self-directed IRAs in order to get more real estate, or in order to do real estate in a more tax-friendly environment. Not really necessary unless you're doing flips. For me, I'm not a flipper, so self-directed IRA wouldn't make the most sense for me unless most of the money was in the IRA and I'm just looking to accumulate more properties. So you can still self-direct your IRA. Your IRA can literally go out and buy real estate. It can do partnerships with other IRAs or other people in order to buy real estate. Or you can use it as a down payment on a loan to buy your real estate. Ultimately, you can enjoy tax-free wealth by utilizing real estate as an investment vehicle, and utilizing techniques such as the 1031 exchange. And there are strict rules when it comes to 1031, so it's very complicated. It's not for the layman. It's not a simple strategy. It does require time, energy, and a lot of resources in order to properly execute a 1031 exchange. So you can also acquire real estate through IRA and even an HSA, health savings account. A health savings account allows you to acquire real estate. That's one of the vehicles you can acquire real estate through. And then usually it's best to protect these IRAs, 401ks, IRA, 401k, HSA, put it through an LLC. And then the LLC, basically your IRA or HSA would be owning the LLC, and the LLC is the one that's going out to make these purchases. For me, I like diversification. I think you should be diversified across. You should have IRAs, you should have 401ks, HSAs that are owning some of the real estate. Then you might have your individual, your own money that's invested in real estate through your LLCs and your land trusts. You also want to have perhaps a life insurance policy that's accumulating cash value, where you can take out some money and acquire more real estate, or whatever you decide to buy. Usually these life insurance policies are invested through, index funds and things of that nature anyway. So they're already in the stock market. They're already out there in the market. So they're already being invested over time. So for me, I like diversification. I would couple my real estate with my index funds that are through my life insurance policies, and also my IRAs that currently own stocks, index funds, ETFs, things of that nature. So it's always good to be diversified. I don't think you should be buying real estate in just one way. You should couple it with different ways. When it comes to IRAs, HSAs, and 401ks, you do have to make sure that you have a pretty decent amount in there in order to properly execute the purchase of a property. Won't get into the specifics, but there are very complicated rules regarding IRAs, HSAs, and these other accounts. So real estate can truly allow you to build wealth tax-free, especially if you utilize vehicles such as a Roth IRA to buy your real estate. Very strict rules such as prohibited transactions or prohibited parties, which are far beyond the scope of this presentation. But there are hundreds, thousands of tax benefits, especially for real estate investors. Basically, the government wants you to buy real estate in order to provide housing to people, so that they can have a stable living and be able to get a job and live peacefully and comfortably. The next benefit is appreciation. Real estate is an asset class that has appreciated pretty consistently over time. It's usually about 6% per year, which is lower than the stock market. However, the power of leverage allows this fact to be truly powerful. To be able to appreciate at on average 6% every year. That's a pretty powerful vehicle. If 100,000 appreciates 6%, that you only put in 10,000, well, you basically you made $6,000 while you only had to put in 10,000. So your return on investment is huge. Just off appreciation alone, your cash on cash return is pretty big. That's about a 60% cash on cash return just off appreciation alone, because you only put in 10,000. The property is appreciated by 6%. By 6,000, 6,000 divided by 10,000 is 60%. We're not even talking about cash flow, the tax deductions. We're not talking about any other thing. We're just talking purely appreciation. So that's a very powerful vehicle, or a very powerful benefit in itself. You can literally sit on your couch and watch TV, and your property would be appreciating, just depending on the type of market you're in. Appreciation should not be the main reason that you buy real estate, however, especially if you are a buy and hold investor, somebody who cares more about cash flow, such as myself. But it is a pretty nice benefit. I call it cherry on top. Hey, 6% cherry on top, that's pretty beautiful. And when it's appreciated to a certain point and you're ready to sell it, you can sell it tax-free using one of the 4 strategies that I discussed last week. So real estate is just so powerful. I mean, I can't stress enough the power to own real estate. Of course, you have to manage it properly. You have to take care of it, make sure your tenants are paying on time. Just like anything in life, if you don't take good care of it, it's probably going to crumble. So you always got to take care of your properties. Next benefit is leverage. This is my third favorite of the benefits. Leverage is the ability to buy more with less. Basically, you're using less of your own money to buy more. So you have the ability to buy plenty, an abundant amount of real estate with little to none of your own money. This is what we usually call no money down, little to no money down type of strategies. The reason is because a loan is secured by the property itself. So there's very minimal risk to the lender. The only risk that they is the fact that maybe you something happened to the building. Even if the building burns down, there's insurance that would cover it. And the lender is usually on the insurance policy to make sure they get paid or they get their piece of the cut. So essentially, you're basically buying more with less of your own money. Now, you usually have to put down 20% on a property when we're talking investment properties. However, savvy investors know how to acquire real estate with no money down, little to no money down, using sources such as business credit, lines of credit, SBA loans, FHA loans, conventional loans, things of that nature. Loans that basically require a lower down payment. So instead of you doing 20%, it might now be 10% or 5% or 3.5% using the FHA loan. So these are very powerful ways to buy real estate with little to no money down. For me, my sweet spot, I try to go no higher than 10% down payment on a house. So that's very, very powerful right there. So what this means is that there's truly no limit to how many properties one can buy if you know how to find good deals. That's the key. You have to know how to find good deals. You have to know how to close quick, and you have to know how to find the capital in order to fund your deals. And always have some gap or reserve funds available. There are a lot of real estate investors that go wrong. They get 90% completed on a project. They run out of money. Now they have to sell it for lower than market value because they don't have the money to complete it. or they might even get foreclosed because they literally don't have the money to pay the interest on a loan sometimes. Some loans are interest only. Some loans are principal and interest. For me, if I don't have a tenant, let's say I'm in rehab mode or I'm in fix up mode, then I usually like interest only loans because it puts less pressure on me as the investor to avoid having to pay back a big lump sum of monthly payments. So you really have to find the right strategy, but the power of leverage allows you to buy more with less of your own. Last but not least, longevity. Real estate will always be here. It doesn't matter how many robots come on this planet. Real estate will always, always, always be on this planet, no matter what. Everybody needs real estate. The robots that come to the planet need a place to rest, literally. They need a place to calm themselves, to ease themselves. Human beings need a place to live. Businesses need a place to do business. This radio show needs a place to do the show. Real estate will always be here. If you're walking right now, you're probably stepping on real estate. So real estate is a powerful vehicle in order to create a true abundant amount of wealth. So yeah, you're more than likely sitting or standing on real estate as we speak right now. Real estate is controlled. Real estate is truly a way to control a lot of things. Think about people like Mansa Musa, Warren Buffett. These guys who just ruled. I mean, they're basically rulers of what they do, just because of the fact that this real estate is a very powerful, truly powerful vehicle. So no matter how many robots come on the planet, real estate will still be here. They'll need a place to live. And then this is an industry that will be here forever and ever, no matter what, which is a big reason why you should own it. So just to recap a little bit, real estate offers 6 primary benefits. You have cash flow, mortgage pay down by your tenants, tax benefits, appreciation, leverage, and longevity. Those are the 6 benefits of real estate. If you'd like to find out more information or get more in-depth analysis, I actually wrote a book on this. It's called The Legendary Asset, 6 Reasons Why You Should Own Real Estate. Highly recommend you guys checking it out, you reading it. And it's really meant to expose you to the power, the true power that real estate has, and that real estate can be such a powerful vehicle. It's so powerful to the point where it's like, if you don't own it, you're really losing out. It's nice. The stock market is good. Owning a business is awesome. But when you talk about this right here, real estate, it's very powerful. What I usually like to couple real estate with is life insurance. I like real estate with life insurance or permanent life insurance to be specific, because as a permanent life insurance policy is building cash value over time, I can start treating my life insurance as my bank for my real estate. So it's like, why in the world would you need a JP Morgan or a Bank of America when you have your own life insurance policy that you can use as leverage, the ability to borrow from it tax-free, and use it as money to do your rehabs or to fund your real estate. So I like life insurance for that reason. You can treat it as a bank. Of course, you're still going to have your JP Morgans, your Bank of Americas, your GN banks. But when you have a permanent life insurance policies, which we do own a life insurance company, we're able to offer policies for people. This is a powerful way to use both strategies. And they even have life insurance policies where the bank will fund you. They'll fund you about 5 years into the policy. And then it basically creates this large sum of money that you can use for whatever you desire. Fund your kids' education, fund your retirement, do real estate, whatever it is you desire. The key is capital. Capital is very powerful. Whether it's your capital, somebody else's capital. My advice to anybody looking to get into the real estate is, first and foremost, educate yourself. You have to first identify a strategy that you believe would be best fit. Maybe it's flipping. I don't usually recommend. Maybe it's buy and hold, where you're holding rental properties. For me, I like multifamily, so any research I do is around multifamily real estate. Basically, a building that has 2 or more units in it. Right now we're targeting about 2 to 4 units. Next year we'll be targeting 4 plus units, basically 5 units and above. And then later down the road, we might only be targeting 100 units and above, where we might only buy one of these every year or one of these every 5 years, however long it takes. 100-unit building, one tax bill, one everything, one utility bill. That can be very powerful compared to these 2 flats, 3 flats. But, of course, you got to get started somewhere. So I used to be single family, now more multifamily, and eventually we'll get into the apartment buildings and the golf courses and the things everybody wants to own, basically. But real estate is a long game. It's a game where it takes time to build. Highly recommend it. Make sure you have your real estate team ready. You need to have a good real estate agent. You need to have a good accountant, a good attorney, a good appraiser, a good inspector, and a good lender, somebody who's going to fund your deals, somebody who really is in your best interest, or an investor. There's multiple ways you can fund real estate. It's not just going out to the bank and getting a loan. You can truly get, you can get investors. You can do crowdfunding. You can do, syndication. You can do a lot of different. There's so many ways to fund real estate, to the point where I actually wrote an article, and I did a radio segment on how to fund real estate, which we might do. We might do another segment on that and just get a little more specific with some examples. But real estate is truly a powerful vehicle. I highly recommend it for anybody who's looking to build true long-term wealth. I think it is the most powerful investment, passive income investment, outside of not when we're talking, not talking a business, but truly a vehicle that allows you to build true wealth. And all it takes is one property a year. Literally. One property a year. Make it a goal to buy one property every single year. You start off with your FHA loan or your conventional loan, 3.5% to 5%. You live in one of the units, rent out the other units. I try to aim for 4 flats with these types of loans. If you can't do a 4, at least do a 3. If you do a 3 flat, you're basically living rent-free, mortgage-free, because your tenants are paying you. You're cash flowing every month. You take that money, you put it into the bank, and you basically start building funds for your next property, which your next one might get a little more creative, or you might use seller financing, where the seller is the one that's giving you the loan or the mortgage. Or you might start pulling together money with other investors, or you might get you might get a conventional loan that may be lower than 20% down payment. There's so many ways to buy real estate, so many ways. That's a whole nother segment. This segment specifically is just talking about benefits, the true benefits of buying real estate: cash flow, appreciation, longevity, mortgage pay down by your tenants, leverage, and the fact that there's tax benefits, which is where I specialize. So where do I come in as far as helping you is really anything numbers related. So making sure that you're structured correctly tax-wise. I can also help you with legal and asset protection. So I do advise clients when it comes to their legal affairs, making sure that they're doing things, they're doing things sound from a legal standpoint with the assistance of an attorney. My attorney is one of the top 10 attorneys in the country, in the state of Illinois. So if you need access to that attorney, I'll be more than happy to provide you his contact information. He's actually a business partner of mine, and we do a lot of things together. But that's real estate in a nutshell. It's a very powerful asset. I think everybody should own it. Whether you need time to get started, you can get in with as little as a 580 credit score in some of these loans. And if you know others that have a good credit score and you've gained, the key is education. When it comes to real estate, you consistently have to educate. For me, I've paid over $30,000 just to educate myself on real estate. That's how much education that I believe I need. I mean, not everybody needs that level, by the way, but that's how much I feel I need to be comfortable enough to invest my money into real estate. If I want to take this serious as a wealth building vehicle, then not only I can learn, but of course I can teach other people, because I do provide financial coaching as a service. It's truly powerful. I love real estate, love doing real estate, will always be in it. My family has always been in it. It's truly a powerful vehicle. I think everybody should own it. We'll be doing more talks, more seminars, webinars on real estate as a topic. I want 2020 to be the year that if you haven't bought your first property, please do so. I challenge everybody listening to this segment, if you don't have a property, look into buying one, especially if you have a stable job and a good credit score. There's no reason why you shouldn't. Of course, you might think, oh, it's risky and this and that. And I always tell people crossing the street is risky. I had a car that was sliding out today. That's super risky. I could barely move the car. At a certain point, I had to get others to come and push the car for me. That's risky. That could have injured somebody. That could have hit a car. So when it comes to risk, when for some reason people are more afraid to lose money as opposed to gaining money. It's just that natural tendency of, hey, I'm just holding on to this money. But to build true wealth, you have to take some type of risk. Calculated risk, preferably. And by taking calculated risk, how do you increase your calculations or your odds of winning? Is you do your research, you educate yourself, and you find experts that can help you through your goals, through your journey. So real estate, very powerful vehicle. Recommend it for everybody. Anybody that's listening to this segment right now, I highly recommend real estate as a strategy, as an investment vehicle. Start doing your research, whether it takes 15 minutes a day, 10 minutes a day, 30 minutes a day, whatever it takes. Good sources out there. Bigger Pockets is great to check out for your real estate education. You can check out my personal website, jeffbadu.com, jeffbadu.com. I have a lot of resources on there. You can call me, 773-679-7198, 773-679-7198. There's people out there like Robert Kiyosaki, real estate investor. They teach you a lot about the things you need to know about real estate. I started watching his YouTube videos, played cash flow game, and it put me in a mindset of an investor, somebody who should, as a true wealth builder, some of the things that you need to have. So very powerful, very, very powerful stuff. Always research. Remember, you got Bigger Pockets. And attend one of these 3-day seminars. These one-day fortune builders. They're not a scam. They're not out to get your money. They're just there to provide education. That's the problem with society. Everybody thinks everything is a scam nowadays. It's not a scam. It's an education. If anything, it's free. If you're going to the 1-day, it's free, and then you might have to pay about $100 to $200 or so for the 3-day. But at the 3-day workshop, I learned more about real estate more than any other 3-day period in my life. I learned so much. I actually got in one of those for free, and was able to go through the program. It was a guy named Armando. But Fortune Builders is also pretty good. They'll teach you how to analyze your rehabs, how to pick the right team members, what to look for in a property, how to sell a property, strategies to use to acquire properties. They teach you so much in that 3 days that your $100 just became worth $1 million. I learned so much, and that's what really gave me the jump start. And then I also joined real estate groups like Renatas, which helps me in my real estate business as well as my tax business and these other businesses, because I'm basically the accountant for the Chicago Renatas group now. So just continuously educate yourself. Education is powerful. Don't just jump in. However, when you feel you are ready, please make the jump. There's nothing like jumping. And I'll leave you with this, is that the best things in life are on the opposite side of fear. Fear is just a word that people just seem to hold. There's a fear to do anything. But the best things in life are usually on the other side of fear. So when you embrace it and when you unleash yourself and overcome that fear, that's when the world opens up. If I was scared to become an entrepreneur, I wouldn't be on this radio segment today teaching you about real estate. So don't be afraid. Just do research. How do you overcome fear? You have knowledge. You attain knowledge. You shadow people. Watch people. Follow people and see how they do their flips. Ask them, what mistakes did you make? And how could you have done this better? Look at the projects. Look at the renovations. Ask for their budgets. Ask for what they when it comes to real estate. So with that being said, thank you all for tuning in to WGAT 98.3 FM, your voice, your music, your station. My name is Jeff Badu. Thank you for tuning in to Money Talks, and we'll be in touch. Definitely appreciate you guys. If you guys have any questions, remember you can contact me 773-679-7198. Once again, 773-679-7198. I appreciate you all and hope you all have a great night. Thank you.
You're listening to WGHC 98.3 FM.
While you're but we are nothing friend from the first time.